Hello there and welcome to the Indicator Spotlight. Thanks for tuning in. About once a month, we offer a free download from our indicator library for NinjaTrader 8. It's a short video, about 10 to 15 minutes, with a brief explanation of the indicator concept, the most important functions, and how it can be used in a trading setup. And this month, we're featuring the ATR Trailing Stop, which has just been added to the library. This is an indicator that can be used for highlighting potential trend changes, but as the name implies, it's a trailing stop. This also includes a modified version suggested by Sylvain Vervoort in his Stocks and Commodities article, Average True Range Trailing Stop. So you might want to check out that as well for further reading. But first, let's just have a definition of what a trailing stop is. A trailing stop sets a fixed stop price below the market price, along with a method to trail the stop level if the market moves in your favor. So in long position here, you see the stop price moves up together with the rising prices, whereas if the market falls, the stop price will not change, and a market order is triggered then when the stop price is hit. So we have a limit on the maximal possible loss without limiting the maximum possible gain. And so if you trade 2 lots, you typically work with a set profit target around key support and resistance. And once that is hit, you would start trailing the second lot using trailing stops such as the ATR trailing stop as we're discussing here today. For short positions, it's the opposite. So you see the stop here is moving to the downside, tracing the market here. And once the market goes against our position here, the stop remains in place. And then it's triggering a market order once this level here is hit. Now we'll have a quick look at the main concept for the calculation. The ATR was introduced by Wells Wilder and is a measure of volatility. So it takes the greatest of these 3 scenarios here as defined by the look-back period. So it's either taking the current high minus the current low. And if we have a gap, as we see here, it would be the previous close minus the current low, which would be the true range. So it's taking these gaps into account. And if we have a gap to the other side, it would be the current high minus the previous close. So if we don't have a gap, the true range is simply the range, because then that would be the greatest value of these 3 scenarios. And an average of these values included in the look-back period is then calculated, and that is then the average true range. So as I said, the ATR adapts to changes in volatility, and therefore, instead of setting a fixed tick or percentage of capital as a definition for the stop and trailing method, we use the current volatility to determine the risk for the position. So if we have high volatility, the ATR trailing stop is set relatively wide, as we see here during the regular session, whereas here in the evening session and the night session, we have lower volatility. And once this stop here is taking out, we have a much tighter stop, which is reflecting this low volatility scenario here. Generally, the stop should be placed at a multiple of anywhere between 2 and 4 of the average true range. We've set the default value to 3.5 of the last 10 bars to accommodate for more volatile instruments. You can, of course, adjust both of those values according to the instrument that you're trading and to your risk preference. And because the ATR responds to volatility, the indicator will highlight possible trend changes, and therefore the concept can also be used for stop and reverse systems. For example, a short position is entered or triggered once this long stop level is taken out, and vice versa here for the short stop level. But as I'm sure you're aware, those systems don't work particularly well, mainly because sideways and choppy markets will give back any gains made during trending periods. So this indicator also has a reverse intrabar option, meaning that you don't have to wait for this close level here to plot, or this one over here, in order to define the stop level. And that is important for system trading, obviously. So you then have the reverse intrabar setting activated in this scenario. The low of this bar is taking out the stop level and triggering the market order. And it's the same for this. We have the high taking out the short stop level here, so we don't have to wait for this close up here or the close that was over here, I think, to trigger the stop loss. So that's good to have as a catastrophic stop loss for any system. You could set it a bit wider than the regular stop, which would be based on the close value, and then you'd have a catastrophic stop loss measure in place for unforeseen events. If you'd like to use the trailing stop to identify retracement entries, you can do so by combining it with other indicators. For example, you could be looking at price patterns. So here we see a bearish reversal. We set a new high here, and then we have a close below the previous close. So a bearish reversal in a downtrend as defined by the ATR trailing stop. You can then locate positions with a more favorable risk-reward ratio because you entered very close here to the stop level. But as I mentioned, the ATR trailing stop is primarily suitable for defining exits, not entries. But as mentioned, you can also use it as a trend filter in conjunction with other indicators to define retracement entries or price action signals in the direction of the trend. All right, so I think that's it for the indicator spotlight. Each indicator that we feature here comes with a free download link, which is available below here. It's available free of charge for 30 days. A lot of time and effort went into creating the tools that we present here, so I hope you'll consider sharing it with a trading buddy on Facebook, Twitter, Google+, or via email. Additional trailing stop indicators, such as the super trend, the chandelier stop, the chandelier stop, can be found in the trailing stop category of our library. The indicator library also has many other categories. As you see here, we have some 70 plus indicators available for a one-time payment of only $125. There are no recurring fees on this, and we continuously add new indicators to the library. So I think you'll be hard-pressed to find a better value deal anywhere else in the NinjaTrader community. All right, so with that, I'm going to wrap up the presentation. If you have any questions, get in touch with me via the contact form over at lizardindicators.com, otherwise at info@lizardindicators.com. I'm also available for one-on-one Skype calls if you'd like to speak with me personally. Thanks a lot for checking in. I hope it's been of value to you, and I look forward to hearing from you soon. Take care and bye-bye.